structural shifts in the dollar's dominance are beginning to undermine the existing global power balance. This is not an overnight collapse, but a slow erosion of influence that threatens the long-standing stability of international trade, finance, and geopolitical power. For nearly 50 years, the global economy has relied on an invisible architecture known as the petrodollar system. This system shaped how energy was traded, how reserves were stored, and how the United States maintained financial power across the world. In the early 1970s, the United States built this structure through deliberate geopolitical moves. A key understanding with Saudi Arabia helped ensure that global oil prices and settlements remained tied to the USS dollar. This arrangement gave the dollar extraordinary power. Oil exporters earned massive dollar revenues from crude sales, then recycled much of that money back into American markets through investments, bonds, and financial assets. That capital flow strengthened the euro-dollar market and gave the United States deep liquidity. But that foundation is now being tested. New energy realities, shifting diplomatic alliances, and changing trade patterns are weakening the old petrodollar structure that once seemed almost untouchable. Saudi Arabia, once the central pillar of the petrodollar arrangement, is now exploring trade in currencies beyond the dollar. This is not just a diplomatic disagreement. It signals a deeper reconfiguration of the global energy economy. China is actively challenging dollar dominance through the idea of the petroyuan. As one of the largest buyers of Middle Eastern oil, China has a strong incentive to move energy trade into the renminbi. At the same time, BRICS countries are building alternative financial systems designed to bypass US-controlled networks. Their goal is simple: reduce dependence on the dollar and limit exposure to American sanctions. Global data already shows the pressure. In 2000, the US dollar made up about 71% of global foreign exchange reserves. Today, that share has fallen closer to 59%, showing that nations are slowly diversifying away from the dollar. But the biggest driver may not be politics alone. The global energy transition is also reshaping the dollar's future. The traditional petrodollar system was built on fossil fuel demand, and that demand is now facing long-term pressure. As renewable energy grows, oil becomes less central to the global economy, and if oil becomes less central, the currency used to trade oil also loses part of its strategic importance. This creates what some analysts describe as a petrodollar death spiral. Lower oil demand reduces dollar demand, which encourages countries to hold fewer dollar reserves, further weakening the system. Geopolitical conflict is adding even more pressure. Wars and instability in the Middle East make investors question whether dollar assets remain safe during regional crises. US sanctions have also changed how other countries view the dollar. Freezing reserves sends a clear message: your money is safe only if you remain politically aligned with Washington. That message creates a strong incentive for countries to search for sanction-proof payment systems and alternative reserve assets. The more the dollar is used as a weapon, the more rivals look for ways around it. The scale of this system is enormous. OPEC members earned hundreds of billions of dollars in oil export revenue in a single year. If even a small portion of that trade shifts into euros, yuan, or BRICS-linked currencies, the impact could be massive. Three forces are now weakening dollar dominance at the same time: China's geopolitical strategy, the global shift toward renewable energy, and BRICS' efforts to build financial systems outside Western control. This matters because US debt financing and military power both depend on global demand for dollars. If that demand fades, America's ability to operate as a global superpower could weaken over time. Still, the dollar is not disappearing tomorrow. It remains dominant because no other market currently offers the same liquidity, depth, and trust as US Treasury markets. But the direction is clear. The world is moving toward a more multipolar financial era, where no single currency may hold total dominance over global trade and reserves. The petrodollar system helped define American power for half a century. But now, energy markets, sanctions, China, BRICS, and renewable technology are all pushing against it at once. So the real question is this: is the dollar's dominance actually dying, or is the global economy simply entering a new phase of volatility and competition? Drop your take in the comments. Is the petrodollar era ending, or is the dollar still too powerful to replace?